Just doing a link for a live feed to social media, LinkedIn, Facebook, and YouTube. So we'll be starting the webinar very shortly. Thank you for your participation. If you have any questions during the webinar, can you please type your question in on your computer, and I will answer the questions later. If you think of the question later on, just send me an email, please, peter@essbiztools.com.au. So welcome everyone to this webinar today, Office Services over 52 weeks. I'm Peter Towers, Managing Director of ESS BIZTOOLS. I'd like to welcome our viewers on the direct feed to this webinar, but also those people who are watching this webinar as part of a live feed to social media channels. If you have any questions and you're watching via a social media live feed, unfortunately you cannot log straight in to me. Can you please send me an email, peter@essbiztools.com.au, and I will get back to you. Review your client's business so that your knowledge is 1 inch wide and 1 mile deep. What's that mean? I think it means that accountants have to have a more intense overview than what you need for the preparation of annual accounts and a tax return for a client. How much do you really know about a client's business when that is your role, prepare the tax return for them? A lot of the preparation work's already been done by someone else. So if you're going to take on the assignment whereby your firm's supplying a broader service that I'd like to think would be over 52 weeks of the year, I think one of the first things you need to do is to talk to the leadership team. What's their vision? Where do they see the business going? What problems do they have? You will then also be making a judgment of how effective they are. Should you be talking to the CEO or the owner about how they approach their roles? I think it's very important that you trace the business journey, go way back to the beginning. And that might be at a warehouse, it might even be at a port where imports of raw materials are occurring or products are coming into the country. Or it might be the start of a quotation going to someone in answer to a request to submit a quotation. Whatever it is, it's important, I think, if you're going to be offering a virtual chief financial officer service for your clients, to have a clear understanding of how this business works, how it all ticks together. And be mindful that you're looking for any potential weak links as you undertake this review, looking at it from a quality control and a safeguard of the business assets point of view. Who are the team members? Who are they? What qualifications do they have? What experience do they have? What team training is being presented to them? Are they just sitting in their own little isolated area, or have they got an understanding of the broader view of this particular business? What's the energy requirements? Where's it sourced? Are they supply difficulties? Is the war in Ukraine causing supply issues or forcing prices to go up? Is there problems with the receipt of goods from overseas? Again, caused through that Russian invasion. What's the alternatives? Is your client likely to talk to you about that? Is there some costing exercises that might have to be prepared in looking at the transformation to alternative types of supply to run the factory, the workshop, and what the business is relying on? What happens to the completed stock after it's gone through the manufacturing process? Where's it go? Who records it? What key performance indicators are being prepared as part of that manufacturing process, or whatever the process is in that initial stage within this business? Who looks after marketing? I can remember when marketing was a fairly new term, a unique term. I was in a public company that had been operating for 50 years when we appointed our first marketing manager. And he was an Englishman who had turned up, knew a lot about our industry, but he was the first marketing guy we had. And we had examples of all sorts of things, with him laying out the various letterheads that were being used around our organisation, which was spread over the 3 eastern states. Every branch had its own design of a letterhead, and some had their name spelt differently to what the official name was. There was all sorts of problems that no one had ever looked at. So that was the start of marketing. Obviously, marketing does a lot more than that. So what's happening in this organisation? What's the social media exposure? Is there a separate budget for marketing? And what supervision is there on where that money's been spent? You're acting as a virtual CFO. You need to understand what's going on there. Probably didn't know anything about it in just preparing the tax return, but now you need to be very mindful of where the money's being spent. Who's responsible for sales? Nothing happens in a business until there's a sale. Most importantly, when the payment's made, it's even better. So who's in charge of sales? How do they go about it? Do they just set their own selling prices? Or is the CEO or the leadership team in total setting guidelines as to how low they can go in accepting an offer from a customer before it's referred back to the leadership team for a decision? What intellectual property is being developed? Is anyone thinking of intellectual property around this business? One or two guys have gone off and started to design a new way of working the lathe or some other machine, and they're fiddling with a little product. Is it got some value? Could it be used somewhere else? Is it being documented what they're doing so that there's a corporate memory for that work being undertaken, so that we don't go through the same process again in 2 years' time when that machine breaks down again, or it's got over its annual or its biannual overhaul, and people say, well, geez, we've got to fix this part. And didn't someone do that 2 years ago? Did they write down their process so that it's easier to follow next time? This is all the intellectual property of a business. Can be a very valuable asset. It is for all businesses, but for some it is exceptionally valuable because they have gone to the trouble of recording what they did. What are the risks of this business? Now, we could run a separate webinar on business risks, of course, but what are they for this business? How exposed are they to not registering on the Personal Property Securities Register? I think this is an important question that you need to be asking very early in the piece. Perhaps you should have asked it when you were just doing the annual accounts and tax returns, but now you're in the middle of all this. If you're going to be offering this broader advisory service to your clients. Don't understand the Personal Property Securities Register? A lot of people don't, a lot of accountants don't. But you need to if you're going to be offering this sort of service. Within ESS BIZTOOLS, we've got a full product package on the PPSR. I don't particularly like the legislation, but it doesn't matter what I like. The government said we had to have it. But there's some real risks if your clients don't understand how they can safeguard themselves. And I think it's very much in your court to make sure that you've informed them about the Personal Property Securities Register and made sure they understand the risks that they might be running by not registering. Who looks after debtors? Now, debtors brings in new customers. It brings in, a letter going to the customers explaining the terms of trade that your client has, your business has. Making sure that the customer has signed off on that and returned it to the office. And if you're going to register them on the Personal Property Securities Register, you need to have a good system in place because you've only got 21 days to get those documents prepared so that you can proceed with the registration, because you must have the documents signed by your customer. Is the debtor's days outstanding calculated promptly at the end of the month, or 7 days, as someone reminded me the other day? There's still a lot of businesses around Australia produce debtors statements and analysis every 7 days. Happens in the perishable food industry, the meat industry. It's a 7-day cycle. Who looks at the calculation of the debtors' days outstanding? Who looks at the debtors' lists and evaluates everyone that's over whatever the trading terms are, 7 days, 30 days? Who's following up? What feedback is given? Or have they got a lot of money tied up in debtors that they don't need to have? So I think what you need to do from all this is part of this 1 inch wide and 1 mile deep knowledge is to develop flowcharts, jotting down how this organisation fits together, who does what. It is akin to doing an audit, because if you're going to be performing this very important role and being able to be a great source of information and comfort for your client, the CEO of this business, and the others in the leadership team, I really believe you need to have this type of information documented. It's a once-only job. Maybe once a year you review it to make sure there's been no changes occurred. What you're looking for is to make sure that everything's accountable for. You can follow through to make sure that all of the production has been documented through into completed stock and ultimately a sale. So there's no fraud being committed by anyone. So what you've been looking for in all this is how does the internal control system work? Is it functioning properly? Then I think you're ready to start producing a business plan, because it's inconceivable to me that anyone is going to take on the role of being the virtual CFO and not have a business plan to work with. So it all starts with the business plan. I think it's important that the business plan is prepared in conjunction with the leadership team. I've known consultants and some accountants who have just gone off and written a business plan with virtually no input at all from anyone in the business, including the owner. I don't think that's the right way to do it. The business plan is for the leadership team to implement. They therefore need to have a say in it, to have commented, to have made suggestions. So you should be talking to them. Within ESS BIZTOOLS, we have 50 questionnaires of all aspects of what goes on in the business, some of the issues I've just discussed, which will give you some questions you can raise with your client so that you get a clear understanding of how they want to now run this business. You've done your overview, you know how it operates. It now needs to be documented so that people have this very important document called a business plan. You can then get some team member input. That will vary depending on clients' attitudes. I still like the concept of bringing the whole team together, as long as it's a manageable number. And most of you will have a manageable number, up to a couple hundred people. and get their feedback. What changes would they like to see happen? What improvements could be done? What do they hear from the customers that needs to be looked at within this business? And then you're in a position to submit the final draft of the business plan back to the leadership team and get them to sign off on that document. It's very important because they are going to implement it. And then we're ready to move into the next phase, which is predictive accounting. Predictive accounting, I think, is probably the most important role that you play because it's telling your clients if they do certain things, what's the end result going to be in 1, 3, 5 years' time, or longer if you want to go longer. It all starts with a chart of accounts because the terminology that is used in the budgets and cash flow forecasts, I think, should be identical to what is used in the final profit and loss accounts and balance sheets for the business. So the best way to do is make sure you got the chart of accounts sorted out first. There's an understanding of what each of the categories means. I like making sure there's plenty of room to really describe sales, put them into departments so that we're getting some meaningful figures rather than putting it all together and having a sales figure of $3 million. It'd be nice to know how that's dissected into major categories because that might show us that there's some problems. And then that might lead to getting further analysis done on those individual components, perhaps even breaking them into their own profit and loss account so we can get gross profit percentages calculated on those individual segments of the business. And then we need budgets for each business unit. Very important. I don't like the concept of putting all the financial forecasts into one budget. If, as far as you can, break it down into separate business units. So if a business has a workshop, a delivery section, a main office, and then 3 retail outlets, I would be creating separate budgets, profit and loss accounts for each of those activities. So you can find out what their performance is or what their costs are. And I think it's important that you think about providing the information on a weekly basis. Now, it might vary depending on the industry that your client's in, but most definitely if it's retail or wholesale, weekly becomes very important. And there's various considerations that need to be given when you're doing these budgets. Is your client subjected to pay week, off week type scenarios, which happens in various parts around Australia, depending on a major industry or the demographics of your clients in this business? If they're all people on a social security type payment, well, the pension's only paid every couple of weeks. What are the key drivers that you need to be thinking about? Because part of the budgeting process is you need these other sub-accounts prepared, raw materials. So it's very obvious how much the investment is going to be in the raw material stock at any time in the next 12 months in detail, but possibly 2, 3, 5 years' time. What production is going to be produced? What energy is going to be required? What the final stock figures are going to be at the end of each month? The debtors forecast, the creditors forecast, the payroll forecast are all very important to know because they feed then into the budgets and cash flow forecasts. The cash flow forecasts obviously are measuring where the money is going and records the commitments for things like loan repayments, hire purchase, lease payments, taxation payments, dividend payments, capital expenditure. And we'll also be able to highlight what the cash figure is going to be month by month. This might highlight that the business needs to be trying to raise some additional funds, either as a bank loan Do they have security they can offer the bank? Or perhaps the company might want to look at trying to raise some capital as a crowdsourced funding equity raising company, Section 708 capital raising under the Corporations Act. Or if they're a bit larger and they want to do an initial public offer, going through the initial public offer process, or making an approach to some venture capitalists, venture capital organisations, to see whether they will fund them. Projected balance sheets is the final component of the predictive accounting reports. A lot of people prepare cash flow forecasts and budgets, but don't worry about the projected balance sheets. I think it's the culmination of this whole exercise. Number one, to make sure it all balances, and that's not an insignificant matter to be concerned about. But secondly, to be able to clearly show your client that if they adopt the policies that have been suggested and they implement various suggestions, that in 3 years' time, this should be the balance sheet position. And in 5 years' time, this will be the position. It gives them satisfaction that if they continue on the policy, that they're going to be able to achieve that sort of end result. So what we've done up to this is looked at the framework. We've looked at reviewing the overall business, and you've documented that, how it all works. We've then looked at the chart of accounts and the predictive accounting reports, and for that we did the business plan. And incidentally, the predictive accounting reports of budgets and cash flow forecasts is really the financial interpretation of what's in the business plan. So now we're ready to go. What happens daily? Now this varies depending on your client. What I'm thinking about here now is a retail type business. And one of the key things you can do there is to set up the system that they are documenting their sales by the hour, because that can help them in their planning of staff rosters, or even trading hours. I've noticed in some cities that some retail shops don't open to 10 a.m, but they're trading through to 7 p.m. That's an indication to me that they've monitored where their customers are coming from. And no one's there at 8 a.m. or 9 a.m. They start to want to do business from 10 a.m. So they've changed their time. So they would have known that. Very important, I think, to know the number of customers each day, or each hour also, of course, and then what the average sale, and even the average sale by hour might give you some information. This is part of the real work on key performance indicators, which is very important, something you probably don't even think about when it comes to the tax return, but it is vital that this information is prepared, it's analysed, and it's fed back into management as soon as possible. So then let's look at weekly. I think weekly is ignored by most SMEs, as is the daily, yet the big companies do it. The really big companies do this. Why? Because it helps them run businesses better. I think it's necessary for you to suggest to your client that you implement a weekly performance report for each of these business units. Don't lump it all together. If there's 6 or 7 different departments within a company, break it down. And there should be a profitability analysis. We sold $2,500 worth of product for the week, and we made $450 profit or whatever. And here's the breakdown of it. Here's the gross profit percentage. How does it compare to last week or the previous month? Here's the labour to turnover percentage. Here's the wastage that we think we had. And in each case, we should be comparing to what happened previously. And that's why we've got the comparison to budget. And what are the key performance indicators for each of these business units? Now you can set this up, set up the system for a client. You don't have to manage this as such, just make sure it's been done and that the information's flowing. First of all, to the person who's responsible for that individual business unit, whether he's called or she's called a manager or a leading hand or a supervisor, whatever it is, that I think courtesy says they get a report. And also to the to the owner, CEO, or other leadership team members, so they know how the business is going. So if there's some problems, they can do something about it. They're not waiting a month, or they were relying on annual accounts, they could be waiting a long time to get the feedback that something went wrong. This way, you know it very quickly. It could even be daily, but most definitely you'd get an inkling something's wrong at the end of the week. And then that's up to management. Your role, as I see it, is you highlight this to people. And then monthly, we've got a balance sheet, and now I think I skipped through something else. Yeah, on a monthly basis, we need the trading and profit and loss account for each business unit. Comparison to budget, a variation report, highlighting and then making some suggestions, and the KPIs. The KPIs are vital coming through. And then we've got the balance sheet analysis, supporting schedules for each balance sheet item. We want to make sure that it's not rubbish that's in the balance sheet, that it is all supported. And once you start doing this, it'll be very easy, just month to month. You've got supplementary information which should document back to that balance sheet. The inventory, debtors, creditors, work in progress, the amount of research and development that's been undertaken, capital expenditure, should all be able to be supported with supplementary documentation. And the benefit of all this is then you can say to your client, this is the financial position of your business at this particular time. Then I see it that what you can be preparing is a monthly report. Now, you could include a feasibility study on any proposed capital expenditure, an update on any capital expenditure project that the company's doing, research and development progress report if they're undertaking research and development, benchmarking comparisons, maybe not every month, maybe every quarter, up against a benchmarking report, financial projects to be completed in the next 3 months. Very important. What are you setting as your targets for the next 3 months? What has to get done? And the reason you're putting all that in there is I think this report should go to the business review meeting each month, the finance report, which we've just discussed. And this would be a meeting with the leadership team to consider the financial reports on the individual business units. And obviously the leadership team would be scrutinising these figures, asking questions to the managers of those businesses and having a real discussion. And it's also sound planning, I think, for these meetings to be chaired by the partner in your firm is the virtual CFO for this client, because you've got all the data. At the monthly business review meeting, which would be attended by the leadership team, minutes and action plans should be prepared. Normally that would be your role, and you'd send it out to the attendees. And out of all this, the overall financial report's going to be prepared, presumably by you, which incorporates any feedback you got from the leadership team at the business review meeting, so that this can be submitted to the board of directors. Or board of advice. And I think it's important that you stress to your client that if they're not holding board of directors or board of advice meetings at present, that this whole process has been put in place so that they can do so. Make sure those meetings are a week after the business review meeting, so you've got time to finalise the reports and get them to those board members at least 3 days prior to a meeting. So they've got time to read, absorb, to think about the results that have been achieved. And they'll be looking at the budgets and cash flow forecasts going forward to get an understanding of where this business is headed. So what else is there in the 52-week financial services program that I think is very obvious what accountants should be instigating with your SME clients. It might be business funding monitoring on submission of reports, basically looking at crowdsourced funding equity raising or Section 708 capital raising, putting the documentation. Could be research and development update, could be review of grants and looking at applications. If your client's an exporter and your turnover is under $20 million, or their turnover is under $20 million, looking at the progress on an export market development grant. What risks has this business got? Perhaps every month there's a review of the risks, including the Personal Property Securities Register, and the reports on any other financial matters as required. Now, I think this is a great activity for talent attraction and retention. There have been numerous surveys and articles that accountants have identified that talent attraction and retention is your biggest problem. Today's generations don't seem to be inclined to sit at desks all day to prepare tax returns. They want some variety. I hope you agree that this approach of the 52-week of the year service for clients is variety. It's giving some of your team members different work to think about. It's giving them real accounting work, a real working relationship with a client. Because I don't see the partner doing all what I've just described. Obviously, the team would be allocated various aspects of that role and would be delivering. And then it's getting delivered each month, 12 months of the year. So it's a great activity for talent development. And I think out of that, you're going to have happy and enthusiastic team members. Why? Because the work will be interesting and challenging for them to undertake. Your clients will be happy because they'll be receiving accounting services that will assist them to run better businesses, to scale up. Now, not everyone wants to have a $100 million turnover business. They might be quite happy to have a $2 or $3 million turnover business. But one of the challenges is that based on a survey that Thomson Reuters released earlier this week, all businesses, no matter what sector, need to keep moving to adjust and adapt to changing market conditions. So your clients need to do that. And your accounting firm will be receiving income from a diversified group of clients. I think it's a win-win-win all round for your team, your clients, and for your accounting firm. ESS BIZTOOLS product packages will assist you to introduce a 52-week service for your clients. Now, some clients will say they're too small for that, but then you might be able to convince them on a monthly or 3-monthly service. The key thing is services should be offered throughout the year, just not at the end of the financial year. They don't get any benefit out of that. Now, we've got a special Easter offer. Yes, it is Easter in a few weeks. So our ESS BIZTOOLS Advanced package, which normally we sell at $5,909 plus GST, we've reduced that to $2,699. Yes, $2,699 plus GST, because we want to see more accountants being able to fully embrace this concept of being able to offer the sort of services I've described to you today to your clients. So what's included? 12-month subscription, 24/7 access, and we have holiday accommodation vouchers. You'll get 2 of those. Allocate them as you see fit in your organisation. And the vouchers are running down. We've got enough, I think, for this launch, but please get in quick. So we make sure we get them. Now, the special offer is available on the Tuesday, the 11th of April. So we've gone the day beyond Easter. So you've got plenty of time to think about it, but the holiday vouchers won't last forever. So please get in as soon as you can and make your investment to ESS BIZTOOLS. So go to www.essbiztools.com.au and click on subscription. Now, if you want to know more, why not visit our websites, www.essbiztools.com.au and www.essbizgreens.com.au. And you can familiarise yourself with the tools that will assist you to deliver these types of services to help your clients grow and survive. Or you can contact us. Send us an email, peter@essbiztools.com.au, and we can set up a Zoom meeting with you, complimentary. Or if you'd like to just make a phone call, that's okay. 1300 232 088 is the number, and we'll follow you up then with a Zoom meeting. At 45 minutes, we'll look at the issues, talk about your firm, your clients, your team, and then it's up to you to decide whether you wish to work with us. Our next webinar in this series is next week, delivering virtual Chief Financial Officer services, which is obviously a follow-on from this conversation today. I'd like to have you join us Wednesday, the 29th of March at 11 a.m. AEST. To register, please go to our website. A reminder that this special offer expires on Tuesday, the 11th of April, 2699 for a wide range of services, which will really help you to implement with your clients. So thank you for your participation in this webinar. I'm just checking now. I don't seem to have any comments or questions or concerns. I hope that means that you got all the information you wanted from today. We will send the people who have been recorded as being on the webinar for the duration. We will send you a CPD participation certificate that you can use with the professional bodies if you wish. For those of you who have watched this on the virtual feed to social media channels, thank you for being with us. If you have any questions, can you please send us an email, peter@essbiztools.com.au. And if you're watching this webinar recording at a time more suitable to your timetables and your commitments, and you have questions, please don't hesitate to follow up with sending the questions through to us. Have a great day. Stay safe. Thank you. And I look forward to hearing from you. Thank you very much.